Okay, so I'm just going to dive in, guys, again this week into my predictions pretty much in the S&P 500, which obviously is the broader market. It's going to trend a lot of the big names that we do like to trade. But my main focus here, guys, is because I did a lot of analysis over the weekend where I think that it's time to actually maybe look into the ETFs and see some sort of direction in how the big names are going to move going into the new week. So I'm glad you guys can hear me now, but just to kind of give you guys an update on how I'm doing my charting, right? Obviously, this yellow trend line, we are on a larger time frame, right? Is going to be a nice level of resistance and a nice level of support. Okay. Of course, this broadening range, right, into like a microphone is going to give a lot of volatility going into the next stretch, right? So meaning that when we do have directional momentum into a certain, either the upside or the downside, we might and we will probably see a larger volatility start to creep in. Now, again, what I want to kind of pinpoint here, though, even though this is the broadening range of what the price action will eventually go to, as we do trade options, right, which I will break down my analysis on how I'm going to trade this in a bit. It's a key point or a key indication that you guys should have on your charts that you guys are going into the next month, the next 2 months, because of course, after a huge, obvious run up, we do need some sort of consolidation or some sell-offs, right? So that we can uptake the momentum onto the upside. So I'm not going to be surprised if we do consolidate for the next month. Obviously, we kind of are, right, in no man's land here. And as we day trading this, we're swing trading this, we're catching the short-term trends. So, which is the reason why I have these teal lines noted on my charts, okay, which I think is more prominent to utilize in the near future. And just kind of give you the backstory, right, for people who are just tuning in now. The purple line, long-term trend line, we've been holding this uptrend for about 3 years now. Go ahead and going like a yearly time frame or weekly time frame, right? We're continuing to hold this uptrend over and over again on that same bounce. Okay, and we did bounce again from that trend line. Okay, guys. So, in a sense, if you're looking at this from a month to month, maybe even potentially year to year basis, yes, we are still bullish. We are still, riding it up to the upside. So again, I mean, if you want a long-term, bias, right, it is definitely to the upside still. It is technically by the dip. But of course, we're looking at this from a shorter time frame. We're trying to catch directional plays day to day as we day trade this. But of course, if you're investing into equities and whatnot, technically, yes, we are still in a bull trend. I don't see no indication of getting short or going short yet, right? I mean, it can happen this week, it can happen next week. But of course, like I said, we are still very bullish on how we are seeing the price action. Again, on the 4-hour chart, so this purple line is that same trend line that you guys were just looking at on the larger time frame. Now, this purple line here was drawn right before this imminent sell-off, which happened about 3 days ago, right? What happened in futures, and it had a nice little drop. So I drew this trend line, initially moved up a little bit. Right now, I just extended it out, and I want to see. Well, obviously it happened, but what I wanted to see for the bulls is that we break and we have this retest, which is why we have two directional plays that very could happen this week. We either bounce here, right, and we continue to move up, retest this, teal trend line or this 417 price mark, and then as we retest, we continue to have a bullish continuation to the upside. That's the first play, right? Because I want to watch these teal trend lines, which I think is more, important in the short term, right? Of course, if we break these, the next trend lines that I'm going to be watching is these yellows, okay? The broadening, microphone shaped chart pattern. So if we do have this bullish momentum and we bounce from Monday, right? Which obviously, I'm not going to lie to you, if I'm looking at these channelings, right? And we're on the 4-hour, not the daily, right? So it doesn't show that we are finished consolidating or even having a nice little sell-off here to maybe potentially touch this bottom of the teal trend line before another huge leg up, okay? But it is what it is. And what we need to do and how we're going to trade this is that I'm looking for this break at this 414.68. Again, it doesn't have to be by the penny, but it could be, you know, plus or minus 50 cent range. If we break this and we get a nice huge volume, you know, start to pick in, and a huge, you know, and bunch of selling pressure start to pick in, start to step in as well, then I can very much tell you that I would like an entry to the downside for a potential retouch of first, right, profit target of 410, which kind of, you know, links up exactly to where this long-term trend line is. You know, of course, if we do break, then I can see us touching this teal trend line. You know, as we trade, we're trading probability. So obviously, as we break, and let's just say we do break, right, the more and more we sell off, obviously the risk to reward to the downside becomes less and less. Okay, so that's why if we needed a price target 1, I would, if we break this 414, I would actually shoot for this around 412. After the 412, if it does break, or let's just say you don't collect full profits, but you leave a runner, my next profit target would be that 410. And if I leave another runner, let's just say I collect more, right? Of course, it's going to be this bottom of the teal trend line. And that's quite stretched, guys. I usually don't trade and swing like that. And it's very rare that we have, let's just say, a let's say like a 60-point move to the downside if this was the SPX. And you know, if it does happen, right, you would bank very hard. But you know, the way I'm doing it is I'm just, hey, let me make some quick cash, let me make some money here. High probability trades. I'm not here to shoot for the home runs, even though it does look very good, setting up to the downside if we break this potential mark. For the bull side, if we do bounce, right, and it's very likely as well. I mean, it can go both ways, right? If we do bounce from this purple trend line, and then we have that breakout, that retest to shoot back up to the upside, you know, I'm going to be watching for this break of 417. I don't want to actually chase this, to be honest, guys. If let's just say we open up above at 415 and we do see a lot of buying pressure, I probably would size into a little bit smaller. I don't want to push anything too stretched here, just because, like I said, anything that's run up XYZ amount, your risk to reward is a lot slimmer than it was if you were to buy the dip, right? But, and you know, that being said, if we do sell off and we break this purple trend line, right, and we continue, let's just say we retest and we head back down into 410s, and after 410s, let's say we retrace again, and then we bounce back into the teal line, this right here is a phenomenal buy zone. And if it ever does reach this point, you can bet that I will size in heavy to get on the upside. I might not play weeklies here. I might actually, if it ever does retrace here and we have a nice big sell-off, again, the role flips now, guys. The risk to reward to trade to the upside is much greater than it to trade to the downside from where we are right here. So like I said, this is a good, nice buy zone here. I can even set it on the charts for a potential, you know, area marker. So when it ever does reach around, let's just say $406 per share, I might go a little heavier, and then go a couple weeks out, play the nice little bounce, right? Bank on that, call it a day, make a couple K, I don't know, whatever it is, depending on your size. But what I'm looking for, again, like I said, guys, going into tomorrow, is I want to see this $414 break down. Based off what I'm seeing right now, guys, and if this short-term channel is very important to me, I do see a lot more downside ahead. Again, you know, 412s, PT1, 410, PT2, and then the bottom of this trend line is PT3, which is very stretched, but higher risk, higher reward to risk, right? If you were to get in now. So anyways, those are two scenarios that I'm watching again. And, you know, that's just the S&P 500, right? This is the SPY, which a lot of the big names and whatnot, the mega caps, are going to follow if the SPYs continue to drop as well. And, you know, you can look at it from the /ES. I didn't do this charting here just because I did on the SPY so that other people can understand it a little bit better. When they see like another whole digit, I know some people that like that the chart, they just don't understand it at the end of the day. But if you're just looking at ES, right, which is the exact same thing what we chart in SPY, okay, but a nice clean chart now, we are technically just consolidating here, right? We're in no man's land, okay? So like I said, swing traders, probably not the best unless you're trying to catch these dips and swing, you know, for a day or two. But if you're looking at a couple of months out, I'd probably stay away from leaps at this point, just because you have no confirmation of anything right now. Buyers and sellers are still playing tug of war, and let's just say you continue to try and force trades into leaps, and we just consolidate and then we drop down. Now you're just going to be straight fucked, right? So I think it's waiting for confirmation here for swing traders and leap traders and people that want to actually size in is probably the best way. If you're day trading this, like I said, I want to see that 416 mark, right? Which is, pretty much the low of yesterday's or Friday's close. And when we get that action, then I think we have a good scalping opportunity or day trading opportunity to the downside. And if we don't, right, the trade isn't pretty much there. The way I'm charting it right now, guys, is to play both, is to be prepared if we go to the downside or if we go to the upside, right? That's simply what I'm doing right now over the weekend. Okay, now that we have this setup and we're waiting for this setup to actually implement, right, to execute, right? I mean, then that's where we need to step in and take the trade on. If it doesn't happen, right, sometimes it happens. You do all the homework and the trade doesn't work out in your favor because it's not what you predicted. So be it. It's always a next turn, right? Next time. But as long as you guys are prepared to play the upside or the downside from where we are right now, that's going to be the biggest benefactor of how you guys succeed as traders. And of course, everything is emotionals, right? It's all mindset and how you guys take on the trade. When you guys are taking these trades on, don't go all in every single trade. Go honestly, if you really do want to size in heavy, the max you should do is a third of your trading account, just so you have at least one more time. And that's how I like to set it, to at least DCA, dollar cost average, into that same trade. I only do it once now. I set my rules to dollar cost average once. And if the trade still doesn't work in my favor, obviously after I DCA, my risk is twice. It's double the initial value of when I just entered the trade. But if it still doesn't go in my favor after that DCA, I would just call it a quit, just so you don't blow up your account. You don't get too emotional where you're just saying that, oh, it didn't work out, but I'm going to continue the dollar cost average until it works in my favor. That's probably not the way to do it. So anyways, and then just kind of looking at this from, a /NQ, which is the NASDAQ QQQ. We did break, right, as mentioned, the Andrews pitchfork, which was a phenomenal chart pattern that we can continue to trade back and forth into the bottom median of the channel. We did break. Anytime you see a break from a larger time frame of the Andrews pitchfork, does actually signal very bearish pain ahead. And a good example here, guys, is I remember I charted BABA for you guys. And it's, come on, right? It's BABA, right? Everyone's fucking bullish on BABA, but same exact chart pattern, same exact analysis. We had this right up to the bottom median trend, top of trend, bottom channel. We rode up, and then we finally broke out, had that retest of the bottom of the Andrews pitchfork, and we continued to just dump, right? I'm not saying that BABA is going to continue dumping, but I'm just giving you guys insights on how strong this chart pattern does actually work. And a lot of the Elliott waves fanboys and whatnot, they love this chart pattern as well on how to trade it. Of course, you can see a potential double bottom though of where BABA was, 211, right? If you want to catch the flip side, the bounce here, probably not a bad buy zone. But again, I'm not giving you any analysis on BABA. I'm just giving you what the chart pattern actually takes and holds. So let's just say we do continue to follow that exact same trend, right? We did not technically touch the trend line, but we got very close to it for a retest. And if we see, let's just say the mega caps, because if you want it from a speculative point of view, Apple, Microsoft, all these names reported phenomenal earnings, right? Yes, they continue to dump off. And these names are what make up the S&P 500, make up the QQQs, right? These guys are the big guys. And if they're continuing to show us strong earnings and whatnot, and they continue to sell off post earnings, that's a bad signal, in my opinion, right? Because, I mean, you're going to need what else is the market looking for these guys to continue to make this market continue higher, right? And at the end of the day, it's like, if these guys are blowing up every earnings quarter that they report and we continue to dump afterwards, just imagine if they had a mediocre or below average, or they missed earnings, or they missed revenue, bottom, top line, whatever it is, imagine the market just continue to straight bleed from there. So that's just an idea for you guys on how you guys could, if you guys want to do speculation and whatnot. But I do think that the downside potential is much greater. I mean, look at this, right? This is the Dow Jones, and everyone's talking about value stocks, right? But we're having such a huge run up where we do either need another legs of consolidation like this, or we have that huge run up where we have this consolidation and then maybe a push down, just so we can get back to life, because this is not how things should be moving. So anyways, that's my take on the S&P 500. And again, now what I'm going to pretty much show you guys, right? Since, you know, my marks are here, they're good to go. They're very clean, right? Break below 414. If we break above 417, or if we have a profit target at 410, if we break that 414, things are very clear on a larger time frame, right? Of course, I have these. I'm not going to remove any of these lines here until, you know, until things invalidate, or they do validate. If they do validate, obviously I'm going to keep these lines on my charts. But until that actually validates, let's say Monday or Tuesday, then I'm going to start kind of restructuring my charts, right? But I'm going to share with you on, let me see this, on what I'm actually trading on my active trader. So let's just, I'm going to move this down, right? I'm going to remove time and sales, level 2, live news, right? So what it looks like, of course, remember the teal lines on the top-down analysis, larger time frame, you know, this is the bigger channel that we're actually trying to trade and look for. If we do, let's just say, we have our pre-market highs, right? Of course, this is Friday's action. So try your best to just disregard what we're looking at here for this action. But the 3 pointers, right? This is pre-market high, pre-market low, and previous day's close. Okay, and of course, like I said, we're looking for that 414 breakdown, right? Obviously, on Friday's action, look, buyers did step in to push this back up, and we had a nice intraday reversal. However, look at the volume, guys. It's dead. This is what you should take with a grain of salt. And honestly, that's a trap to me. That's a trap to the upside. That's a bull trap. Okay, guys. And even though, yes, if you saw this on Friday and you decided to, no, this is a bull trap, I'm gonna trade to the downside, obviously you lost money, right? Because the market makers faked you out for the day. Now, however, you need to kind of back test this and look at it and say, hey, look, okay, obviously your bias, your thesis probably was correct. I still think that we moved to the downside, right? We broke these 2 clear indication levels for the day. Now that we did our analysis on what we're looking ahead in the future, right, we're very close to that 414 mark. Okay, so if we were to just have, maybe this was like a dead cat bounce, right, and then we continue to consolidate, and then we flush out, right, and we go back down, this is going to be your key indication on what to watch when you're watching the tape and whatnot, seeing the selling pressure, because you noticed that buyers did technically push this up at around this level, right? It's never by the penny, right? But around this point, you saw buyers step in. If we ever fell back down to this level and buyers does not step in, you know you have a high probability trade to the downside, okay? Simple as that. And as soon as you see that, right, you can take that trade on, right, with conviction. You can take that trade on saying, okay, I'm looking at this larger channel, right? Or here, let me look on the left side. Larger channel. Obviously, we had sellers, right, step in early in the day, intraday, right? So sellers are actually won this battle, okay, based off Friday's action. And then after that, we had this huge sell-off, this huge dump, until we reached, you know, pre-market lows, previous day's close, you know, whatever, right? And then after that, buyers technically kind of thought that they stepped in, right? And it showed that end of day action was like, okay, it might get bullish. That's why, you know, some people, they got caught in this trap They try to run 0 days expiration. They're like, oh yeah, I'm gonna catch this drop. It looks like buyers are stepping in, and then they end up losing money. Okay, and obviously even at this level, right? Because sellers were starting out very strong here, even at this level, buyers were not able to push this back up to where it was intraday. So again, like I said, if I'm choosing a direction to trade, guys, going into tomorrow, into this week, it's definitely to the downside. Okay, you have these channels here as a clear indication of where profit taking or trade indication is going to happen. Like I said, what I'm actually going to be looking for is break a pre-market low, break a potentially previous day's close. We might actually even open below this, but when the pre-market data kind of shows us Monday morning, and let's just say we trade near or around this level, I really do want to see this break with some conviction, so that I can ride this to the downside. I think this is going to pay us fat, right? We don't get these clear patterns, this clear price action, every single day. So that's why I think this week, looking at the SPYs is going to be a big benefactor. It might even just be the biggest trade that you take on. But of course, you just have to be prepared if we do bounce from this zone and buyers, let's just say, continue to push this up. For me, I technically wouldn't take that trade still, unless we saw a huge amount of buyers, right? We saw some bias. We saw some news that kind of has that same confluence that tells us, okay, yes, buyers are going to be in control, right? Let's just say Biden steps in and says, oh, we're giving everyone another 1,200 stimulus. We see the tape kind of roll in or something like that. Then that kind of gives you the idea that, okay, buyers might actually push up here, right? So you have that bias trading to the upside plus the downside. Whatever happens, you take on that trade. So yeah, that's just kind of an idea to show you what Friday's action which was very trappy. Things that a day like this is probably something you should take with a grain of salt. It's not very clear, I would say, if you want to find some sort of direction based off Friday's move. But again, if you're looking at it on this chart, this gives you a clear move. Why? Literally sold from that resistance. Sellers stepped in hard from there too. It's not like they're just like, hey, no, I'm gonna let it, consolidate and figure around here. No, they said hell no, right? They said hell no. They dumped this here. Buyers technically didn't really step in here. To be honest, it's probably just the market makers just saying, okay, we're just gonna let it float around here until we get more confirmation come Monday. But like I said, if we do dump and we do break that 414, oops, I'm going to remove this drawing. And I think we do this. Okay. And if we do touch, we retrace, and then we finally hit this bottom trend line. Again, though, guys, I think this is a phenomenal buy zone. If it ever does come here, let's just say we catch a flush really quick come Monday, okay? And this thing just dumps, right? Just straight dumps throughout the whole day, and we get paid fat. If we were to dump and we saw some bounce from this first, the purple trend line, which is our long-term trend line that, SPY has been holding for a long time since the COVID drop, that could be a potential first entry buy zone, right? Remember, you never go all in for your trading account. Always have some buying power left. I would actually, if we had the straight dump, try and flip it to the upside, because after the straight dump, the probability and the risk reward to the upside is now it's greater to the downside, to the upside than the downside. So I wouldn't mind scaling into maybe a couple weeks out calls if we get near this trend line. And if we dump even further, this would be my second buy zone, okay, around the 406. And if we do that, and let's just say we catch this drop and then we catch this back up, you guys can probably stop trading for the rest of the year. You guys probably just made a ton of money. But of course, until then, let's just see how Monday opens, to be honest with you guys. But keep these lines on your charts going into next week, going into even maybe the week after, because based off this, just 2 weeks or so, 3 weeks of maybe a little consolidation isn't too much, considering that we ran up this much. All right, guys. So keep that in mind. Market is always continuously adapting. So you can't think that we are going to get the same sort of action like this, especially you swing traders. Okay, this was like God's gift to you guys, to be able to just buy every single dip and just wait it out a couple days, couple weeks, whatnot, and continue to make money, right? That's God's gift. Now we got to go back into reality and look at what we are seeing now. We're seeing chop movement, if anything, more bearish sentiment to the downside. So you can't be trading the same way you've been trading the past 4 months, okay? You guys need to adapt to what we're seeing, right? Unless if we saw this continue to make higher highs, right? Yeah, go for it. Right, we probably will continue to swing trade to the upside, right? The trend line is continuing to hold up, but in the short term, in the near term, I think bears are going to win this. So keep that in mind. Anyways, yeah, that's my take on the SPY into a lot of names going into this week. I do have a bearish bias, like I say. So be careful, be conservative. If this is not your market to trade the downside, guys, if let's just say you're a perma bull, and it's like you can never buy puts because you just consciously can't, right? Step away from this market. Don't even trade this. Like, don't even look at charts, right? Until you set some price alerts and you see it continuing in your favor, into the upside, showing some relative strength, right? Then if we can see that, let's just pull up like 20, into some indicators. Right, when we get like very oversold conditions, if you're a perma bull, right, just wait this out. Like, we're RSI is pretty much dead flat even. MACD actually we're just, everything's even right now. So if it's not your market, right, if you're a perma bull, like I said, wait for the fat dip, buy that dip, and then take your eyes away from it. If this is not your market to trade, right, choppy action, if you're not a day trader and whatnot, just step away. Probably save you than help you, especially for your equity curve, right, which we're all trying to grow. So yeah, like I said, just step away then if this is not your market to trade in. So yeah, if you guys have any questions, okay, I see Nino. Though I was only one sitting here getting through the settings. LOL, same here. What do you mean by market makers let it consolidate? So there is what the tape shows, right? You guys know what time and sales. Obviously, the market is closed, right? You don't see tape printing buyers and sellers and whatnot. There are. Let me go into like a smaller time frame. So what that means is that there are manipulations set, right, into how the algos and how all the other indicators work with the price action itself. It's not necessarily always, if you're buying 1,000 shares, there's someone on the other side selling 1,000 shares. Okay. It's never always like that. Even though back in the day, it technically is supposed to. Now they have algos controlling how the price action goes. So usually if you have market makers start to step in, man, it's so stretched and ugly, but let me make it clean. So a good example, right, is probably gap ups and gap downs. The main reason why there's a lot of gap trader strategies out there that they like to trade and is more higher probability, is probably like a 70-30, maybe 80-20, is because anytime you have a gap down, let's just say, market makers will like to want to push this back up to fill. Okay. And a lot of people, they have, reasons for it, right? Which is kind of like people buying the dip, which, in a way it could be true, but more so it's actually the market makers manipulating this market so that we continue to actually potentially fill majority or most of it, right? And when we do, they try and set different, methods of how it is. That's why people that trade chart patterns and patterns itself, like, let me see if there's a good chart pattern somewhere that's set up. Well, I could give you Boeing because we've all been watching it, right? But Boeing from a larger time frame is easier to set. When you have chart patterns like this, you do have market makers setting this up. And when you have a blast off here at the apex, market makers push this up from the bottom here. Same here, if you have like a potential bull flag, they push it up so that it kind of shows that institutions, or in a way that you can manipulate that this stock may be going to the upside or downside. And there is always market makers every single session, every single day, right? This is obviously a larger time frame that they, interpret for you to see what the price action is going to be. A lot of the times, if you have a very oversold day, I don't know when was the last day we had a big dump. It's just like 510, going 30-day 1 hour. So anytime you have like this oversold condition, okay, right, oversold condition, right, not necessarily, you're going to have buyers continue to buy this dip, right? You have market makers proving that this market is tradable, right? Because that's a tone of how the CBOE works, and all the boards. They can't have a potential news. Let's just say, remember like the huge tax dump rule, and then we just continue to dump, and then we had like a couple bounces and whatnot. No way in hell there were people buying those bounces real quick. If anyone, there could have been people buying those bounces, but not large enough to manipulate that market to have that significant bounce before that next leg down, right? Market makers need to show that there is some tradable action here day in and day out, so that when you have a big, news that kind of halts a stock, that's technically not allowed. Not necessarily not allowed. It's against the rules to have that, because if there's more halts, there's more uncertainty to how everything is regulated in the markets, which is why when you have a lot of times when you're looking at a smaller time frame, and let's just say I'm sure it happened to you guys a couple of times. You see it break a key level, right? Let's say 414, and then market makers fake you out and they say, "Oh, just kidding, it's not going to be down," right? That's what they're there to intend to do. Okay. And what do you mean by letting it consolidate? Is that if there's no directional play, right? If you're looking at it from, let's say, a 30-day 1 hour, like we just were. Well, this is a bad chart to do, but if let's just say we're consolidating and there's no actual room for buyers and sellers, as in they're just playing tug of war, volume is probably dead, just like Friday's action. Dead volume, meaning that the only volume that was there is probably retail traders plus the algos. Market makers there just having it consolidate left and right until we see a clear move. So if, let's just say, a big whale or a big institution go ahead and step into the downside, and then you see volume kind of jump, then the market makers are going to trigger that. And having that triggered based on the downside is that sentiment is to the downside in the near term and the short term. However, their job is to continue to relate this going into how the action is going to work, and vice versa too. If it's to the upside, you have market makers there to make it tradable, right? Not necessarily fake you out every single time. The reason why I say fake out is because a lot of times people, let's say they break out from this key level and then they enter here right away, and then they get faked out because it goes back down, right? That's the market maker's job. So that's what you need to be careful of. Anyways, guys, yeah, a quick recap. I have a bearish sentiment going into this week. Key levels to watch: 414, nice profit target, 412. Next one will be 410. If we go back to this trend line, at least on the SPY, perfect buy zone around 406, in my opinion. Bounce off this larger uptrend. Of course, that if we do get there, I'll probably size up, buy a couple weeks out, play it on that quick near-term bounce, and then call it a day. If we do flush out and we break both of these, the yellows and the teals and the purple, Jesus Christ, I bet you we're gonna bounce, get a nice flush down. If we were to break this 397, which is very bearish, retrace back up, continue to dump 385. Let's see how the week unfolds. But yeah, be conservative if this is not your market to trade in. All right, guys. let's have a good week. I'll talk to you guys tomorrow.